Why is cap rate so important? That's what we're discussing today, so you'll want to watch this one. Hey, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. All right, so why is cap rate so important? Well, it is and it isn't. And I'm going to explain to you how that could differ and vary depending on your investment strategy and what you decide to do. So, if you're an investor looking for a long-term hold, like a Walmart or something, cap rate is very important. And you really want to squeeze out a 4 or a 5 cap because you're looking for 20 years, 30 years. You want that income to be stable as much as possible, right? And you really want a good long-term tenant. The downside of that is you have stunted growth. You cannot raise the value of the property too much. Because remember, cap rate has nothing to do with financing. It doesn't matter how you were able to acquire it. Cap rate assumes you own the building with no debt. Now, if cap rate is not important, if you are a value add investor and if you're looking for something to turn around, in that case, cap rate really doesn't matter, right? Because even if it's a 4 cap, by the time you're done with it, you're going to turn it into a 15 or a 16. That's irrelevant. So I wanted to share something with you guys really quickly. One of the investors I help all the time, he constantly looks for a property that has a certain criteria. He's not really interested in cap rates. That's kind of like his model. On the flip side, I have an older gentleman I work with. He likes long-term tenants, Walmart, Wendy's, Taco Bell, that sort of thing. And he keeps them 5, 10, 15 years. He's not really interested in the let's add the value game. He wants consistent income streams coming in all the time. That's a different type of investor where cap rate really does matter. When I interview investors and I am meeting them for the first time, I never ask them what their cap rate is. I'm not even interested. By the time we have our interview and our discussion and I have a thorough evaluation and I know what they want, what they plan to achieve, what their goals are, how they plan to get there, we can usually figure out what they are looking for based on the property and what we're going to do with it. Now, if you have a group of investors and they're probably paying 2% for the money and they want a 5% and they want to make what's in the middle, that's fine, that's really easy. If you have some apartment investors and they're looking at a property and they really want value adds, so they're looking for low rents, it's possible they could take it a 9 or a 10 cap, they could take it all the way to a different level. Most of the time, those investors aren't really interested in cap rates. So cap rates are important, but depending on the type of investing you're doing, if you are an investor that pulls money together, and let's say you're a syndication, you buy apartments, you're not really too concerned with what the cap rates are, right? Because you need to add value for your investors. And that's kind of something you want to look out for. So don't be too interested in cap rates unless you are looking for that specific type of investment. You really don't worry too much about that. Now, another thing to note, the lower the cap rate, the more money you will raise the property. So if you have $1 million property and you have a 4% cap on that property, you can raise the value on a 4 cap a lot more than you can on a 9 or a 10 cap, right? Because the numbers multiply that much more. Another thing I'll touch on cap rates is when you get into a property, make your offer based on the existing cap rate. And that's important because I'm saying cap rate is not important when you're looking for a property, you're looking for that opportunity. Now, if you're buying $1 million property and the cap rate is somewhere in between 7 or an 8, don't pay a 4 or 5 cap because you're going to catch that opportunity. Remember, I always say you pay for what is there now. We don't pay for future growth unless they're going to do it for us. If you're going to put the work in, you pay for the existing cap rate. that's when that really matters. So even if you're looking at a cap rate of maybe 4 or 5%, and maybe you can move it down or up or whatever you think you can do with the property, that's one thing. Make your offer contingent based on what's there, right? Don't go too far ahead. You want to plan out 1 year, 2 year, whatever it is you're doing, but be cognizant of what's existing. And when you're talking to your investors, or maybe you don't have investors, maybe it's just you, focus on where you want to take the property. All right, guys, I got a question for you. What cap rates do you look for in your markets? Like this video, subscribe to this channel, especially if you found it useful. Ask me questions or comments. I'm happy to answer them all. Thank you so much for watching.